welcome back to the Human Roll Season 2, Episode 3, where we are going to get into audits. But before then, just want to say, hope that everyone had a successful year-end season. Hope that W-2s got out okay. And I hope now that you're able to continue to kind of carry on into the rest of the year, just because there's obviously a lot more things in the flow that you need to kind of get through. Of course, your normal day-to-day stuff, but things like audits that come up, some that you're aware of ahead of time, some that you're not. And so hopefully everyone was able to get everything out by the deadline for the W-2 and 1099 season. Also, we are in the month of February. So if anyone celebrates the Valentine's Day season, happy Valentine's Day. I know that's coming up in the next couple of weeks. So hopefully you have a lovely day. No pun intended there. But look, obviously we can't get into every single audit just because every single state is different, right? You'll have tons of other state audits. Your company also may be in a different type of situation currently, like if you're going through the process of potentially going public or something of that nature. We won't get into all the weeds of that, but we are going to get into some of like the top audits that are pretty standard for most companies. So when we talk about the EEOC, the workers' compensation, the Form 5500, right, for your benefits. Those are pretty standard, just based on population. I would say, most of my population, at least most of my listeners, work for populations that meet those thresholds. So I wanted to go through that, but I will start off by at least giving some decent advice on where you can start before your audit even enters into your work world, right? So what can you do on your end to make sure that when an auditor does come in, you are prepared and at least know where to go to get all the information that's needed for the audit, right? So starting from scratch, I would say really is important that your data is clean and really important that your employees' profiles are filled out to the fullest. That includes their department, their ethnicity, race, gender, job categories, any type of cost centers that applies for your company. Those are really, really important when we get into some of these audits that we'll be talking about. You really want to make sure that you have all of that coded in the system. Of course, when we talk about race, people may or may not want to disclose that information. When we talk about gender, of course, there's also an option for them to not list that information. And so it is stated in a lot of these reports that you can go in and update an employee's profile based on just like visuals or, based on something of that nature to where the conversations you have with the employee as well. That way it gets coded into the system. I want to say they might be starting to recognize other types of genders. Don't quote me on that, but I noticed with everything, of course, going on in the world, there may be some changes as to how some of that is being filed. I have not fully fact checked that, but I do remember hearing about a year or so ago that was potentially coming down the line to be included in some of these filings. So every year, it changes, but I would say from an employee profile stance, it is definitely a must that you have employees' information on their personal profiles coded properly and to the fullest as much as possible. And then separately, from a company stance, you really want to make sure you have your job descriptions together, like all job titles linked in with those descriptions. But then really in your system, like your earnings codes, deduction codes, making sure that like a deduction code that should be pre-tax and post-tax is properly set up that way. Alongside that, any earnings codes. So regular earnings, overtime earnings, commissions, bonuses, double time as well, if that applies to your company. So making sure that all of those codes are set up and have been being recorded properly. So severance pay is another one as well, because all of that will tie in to when an auditor comes in and wants a report with all this information broken down in separate columns, right? That's really important to them. So if you have all that set up already, and if you've already been using that process, then you should be, good to go. And secondly, alongside that, I would say know where to get your federal and your state reports that are filed by your HCM provider. So most of you are probably using a heavier, HCM provider on your side. So just know where to get your quarterly 941s, your annual 940s, any state forms that you're currently in, whether that's SIP or SUI, as well, any localities, any of those forms, just know where to go to pull that information. And then separately, also know where to go to pull like your master file or master control report within your HCM system. Wage and tax register is another common name that you'll see in your HCM system. Just know where to go to pull and gather that information, because a lot of times when these auditors come through, they will ask for employee information and they'll also ask for that. So if you can just get thrown into a meeting and they ask, hey, look, do you have your master control? Do you have the 941s? Do you have your 940 or any of the state forms that they ask for? You can quickly go in there, pull it up, and send it over. Also, too, a lot of times they may want like a full thing of like all pay stubs. That's also important as well. Sometimes it's not like individual pay stubs. Sometimes, depending on the audit, it's just a report of every single individual employee and all of what they have been paid. And a lot of times, outside of like the gross pay breakdown, they really want to have individual codes broken down. So what I mentioned to you all, as far as the regular earnings, overtime earnings, double time, and severance, commission, bonuses, all of that, they do like to see that breakdown along the way. And they'll provide with the time frame of when they need that information. So in your system, you may need to create a custom report for some of these. I would say, honestly, from a best practice stance, if you could just get into your system and set up like a custom report that just pulls all of this information. Now, depending on how large the report is, your HCM platform may or may not allow all of those in. But if you just pull so most of the information in, like maybe just combine all of your like medical, dental, and vision deductions in one, right? And then all your life insurance deductions in one, all the 401k deductions in one column. If someone wants an individual breakdown of all of that, and then you can kind of get into the nitty gritty of that as well. And then depending on who you're utilizing for your benefits platform, they should also have some standard benefits reports, right, for you. So that should be helpful where those reports just already have like your difference between like the medical, dental, and vision that you're covering for your employees. A lot of times that may also include the employee and the employer cost of things. But just know that that is something that, again, ties back into setup phase within your system. So when we talk about the employee profile and making sure that every employee profile has gender in there, race in there, their job categories in there, departments in there. You also want to, from a company stance, just make sure when you're setting up your actual benefits in the system that you are in some way coding the full details of the employer costs and the employee costs. And so I know that there are some percentages that could be different for what you cover for certain employee populations. So most companies will cover the same percentage for all populations, but there are some companies that cover a larger percentage for like your C-suite executives or for your SVPs or VPs, right? Versus what you may cover for your other population, right? So maybe you cover 80% for your C-suite executives, but then 70% or 60% for the rest of the population. So sometimes, because that is sensitive, you may not want that always included on an employee's profile. You would be able to code that separately in the employee's profile, depending on your HCM system. But at least if you have it in there, you can still pull it from a report stand. So I always say for companies I work for and clients as well, just to make sure that you have both coded in your benefit plan set up. So that way, when it comes down to these audits and they really want to see the employer portion, you're going to be able to pull that through your reporting stand. That's just the main basis and the foundation of where I wanted to start at, just because if a lot of that is miscoded in your system or not even coded at all, right? If you're not even tracking that information at all, that's going to be very, very top heavy when you get into the audit season, right? And it's going to cause even more stress because you already have an auditor coming through, but then you're having to kind of scramble and gather all of this information on your employees and update your HCM system, right? And so then that just causes more time and waste your time if you can really just start from the beginning. So from the very beginning, when recruiters are coming in and sending you over a new person that's being hired from your HR team, onboarding that person down to the payroll team, keeping up with that data from a processing stance every day. You really just want to make sure maybe every month, even if you can't do every month, just every quarter, maybe running a full report to see what's actually missing on an employee's profile, whether it's gender, whether it's race, whether it's their location. Locations are going to be big when it comes down to the EEOC as well. So you really just want to make sure you have all of that set up, and that way that ensures that you are good to go from that stance. So I would say that start with that foundation. Make sure you have gone through a full system cleanup before you even get hit with an audit as much as humanly possible. Obviously, that's in a perfect world where, nothing gets missed. But I would say if you're running a 500 plus population, and if you're approaching an audit and if you're reviewing everything and you come across a handful, or maybe even come across like 50 employees that are kind of missing a couple of things, that's much better than having to update that than having to update 500 or 1,000 employees, right? That would be really good to kind of keep in mind and make sure you're getting your ducks in a row from there. So with that being said, we'll get into the first audit report that I want to talk to you about today, which is your EEO1 report. EEO stands for EEOC, so your Equal Employment Opportunity Commission. So this one really focuses on ethnicity, race, gender, job categories, which is really critical, right? As we just make sure we have an equilibrium, I guess you can say, when it comes down to that. When you're talking about filing this EEO1 report, of course, you have to at least have 100 plus employees. And also, I think another requirement for that one is even if you have less than 100 employees, if you are owned or affiliated or controlled by a company that has more than 100 employees, you want to just make sure that you're still filing for that. So say if you're a child company, you have a parent company, and your child company has 20 employees, but your parent company has 200, you still would be responsible for filing. Also, another option for filing is if you have 50 or more employees, but then also like a federal contract, right? That's worth more than, I believe, $50,000. You would still be responsible for filing. So there's, of course, some other one-offs if you're in Puerto Rico or the Virgin Islands or the U.S. protectorates, right? That you would not have to file for those populations. So I would say first go with this, just really make sure that this applies to you and to your company. And if there are some populations that should not be included in that, just make sure that you're covering all the boxes, right? I'm checking everything and not entering in data that should not be there. You want to just make sure if you are filing something that you're filing it correctly. Secondly, in regards to the filing of the EEO1 report, so if you're in one location or one establishment, I guess you can say, like say you just have one headquarters and that's it, then you would file your single establishment report. But if you have multiple locations, then you file the multiple establishments report, right? And when you get into having to file the multiple establishments, you do need to file for your corporate headquarter location. You also need to file separately for every single individual establishment, and you will have to go through like the list of like the race, gender, job category for that. And then they also will require a consolidated report for you. So just so you're aware, when you get into the EEOC filings, depending on how many locations your company has, you may have to do things individually for every single location, and then also do one for your main headquarter location, as well as submit the consolidated report for all locations so the numbers will check out for them. This is one report I will say, though, really want to register for your EEO1 filings like ahead of time, just because when you get in there, depending on how large your population is, there is a spreadsheet that you can basically fill out and then upload in. You do have a manual option that you can do too, where you literally just go through one by one and manually enter in the information. I mean, if you're looking at 50 or less employees, or if you're looking at right at that 100 or less employees requirement, then okay, if you want to spend time going through that, and maybe if you only have one, location or one establishment, that should be easy. But if you're looking at larger than that, I would just say make sure you get the Excel sheet and upload it, right? So get the Excel sheet. It'll have all the columns on there that need to be completed, and that way you can just go into your HCM system, pull that information, drop it in, copy and paste, drop it into the report that the EEO is requiring, and then you're good to go. If you have a really, really good HCM system, so little tidbit, there are some HCM systems that might even have their own EEO1 report to make it easy for you. So remember when I started off by saying, hey, look, make sure you have all your data in the system completed. One other good thing is that if you do have all the data completed, a lot of times when the due date for this report is coming around, you can just go into your HCM provider site, download their EEO1 report, and then use that to drop it in. So a lot of these larger HCM systems, like the Workdays, the ADPs, the Oracles of the world, and so forth, they are typically working with providers on the back end, working with these details on the back end. So knowing what is needed on the report to hopefully make your life easier. But at the end of the day, it does ultimately fall on you and your data and your employees' data and your team keeping up with it. So as long as that's properly in the system, then you should be good to go to really pull that report and upload it in. I would also say just definitely register ahead of time so you can get that information going. Don't wait until the last minute. I know that's easier said than done because the day-to-day just gets so top heavy, and just, you have your normal day-to-day going on, and then you always get thrown a wrench throughout your day if something happening, and could always get distracted. But the earlier you can register online on the EEOC side, and then kind of get the details of the 100 report, I believe it's your standard form 100 report. Once you get that information, you can really kind of visualize it and put in your mind what's really needed. Then it's a lot easier. But if you're waiting to the last minute to do it, I can tell you, the minute they close out at the end of the day, they really will shut down their system, and then you're kind of stuck, right? So you really don't want to wait until the very last day. And then, of course, you're talking about different time zones. So I know sometimes if you're on the West Coast, but then if their system is coded to the East Coast, it could cut out a little earlier. So you really just want to make sure you're staying, ahead of that, and just knowing when things are coming up and making sure you're tracking all that information. Also for your job classifications for the EEO1 report, this applies to part-time and full-time employees. So just so you're aware, it doesn't just apply to one or the other. It applies to your full population of employees. And then for the job classifications, of course, you need to go through whether they're executive, senior level, first, mid-level, professionals, technicians, sales workers, laborers and helpers. The list goes on. So just so you're aware, you just want to make sure that you're following those proper classifications. And then if for some reason you're confused by it or unsure, just make sure you get to the EEO1 site. That way it can kind of help you decipher between which one to use for your employees and which ones not to use. And then here we talk about the same for race as well, right? So if we're talking about Hispanic, not Hispanic, African American, white, two or more races, Asian, right? So as we go through that, you really want to make sure that's properly set up for all of your employees. That way, you can have a proper tracking of your diversity within your organization. And then when you're preparing to submit your form, one thing that is really, really common to do once you get through everything is that at the very end, you really need to certify your report. So even if you start on one day, you enter in the data, but you want to go back another day, right? And, say it's Monday, the report's not due till Friday. And you get as much as you can done on Monday, but you don't certify it yet because you might want to go back and double check some things, or maybe there's like 10 employees that are missing some items, so you need to go back and just update that. So with that being said too, if you don't certify it, that's perfectly fine. You can go back in and still update the report. However, if you go through on Monday and you're completely done and you want to send it in and you don't certify, it's still going to be pending. So just make sure with this report that you click to certify the report from there. And then once that's good to go, you are all set with your EEO one report. This can be very, very time consuming, right? Any type of audit report can be really time consuming. And I just think that if you are tracking everything from the very beginning, I know that's in a perfect world. I know that's easier said than done, but as much of this data for your employees that you can track and keep up with and consistently just kind of like run some reports and just make sure everyone's checking the boxes when they're hiring people in, the easier it is going to be, of course, once you get into this audit season. Alrighty, so now we are on to your Form 5500 report, which summarizes your employee benefits and really makes sure that you all are in compliance with your employee side benefits. So this applies to funded, self-funded plans, retirement plans, all that good stuff. And if you do have a good HCM provider, they may already have these forms. They may already handle it on the back end for you. But just so, just so we go through this information as well, this is filed with the Department of Labor. And it does require you to file, company to file, if you have over 100 employee participants. So just so you're aware, this is participants, meaning dollars are within their account. So say, for example, we're talking about 401k, right? Maybe you went through a RIF, right? And you had to lay off a couple employees. Say you only have 50 employees in the company, but there's 150 that have dollar amounts in their plan, that would still be considered a plan participant, right? So you want to just make sure that you're still filing this form 5500 for you. So outside of like your medical, dental, and life, we're talking about pension plans, severance pay plans, stock bonuses, all that good stuff for you to file. And as mentioned, so for the Form 5500, for companies that have 100 or more employee participants, right, in the plan, they will file just the standard 5,500. But if you actually do have less than 100 participants, there is another form. It's still 5,500, but it's SF for like short form for you to file. And then if you're just yourself running a company and you're standalone, just say you're the only business owner of the company, then you would file the 5,500 easy form. Right. So there are a couple of different forms to file just depending on the plan participants. Right. So you just want to make sure you're double checking that before you go and filing. And then just so you don't end up filing the wrong report. Right. Or if one of the other forms are a lot more simpler, then this one, you just want to make sure you're staying up to speed on that one and just properly filing the right report. And so this report is filed through Marissa. So it's the eFast report for you to specifically file. And usually the deadline is the last day of the 7th month of your following plan year. So if your plan is on a normal calendar year from like January to December, you would have until July 31st to file. Of course, if that falls on the weekend, then you have the following next business day to file. And then what I will say for this one, really common for people to think that they don't need to file. So what I mentioned earlier about like the plan participants, right? You really want to make sure that regardless of if someone is terminated, if they still have dollars in their account, that does mean that they are participants. So you do need to file. Also, too, just making sure that when we're talking about like 401k, for example, that for that specific piece, you're not going over the annual limit of 401k. So those are also potentially common errors. Most HCM systems already have that pre-programmed in the system, but if you're using a smaller system or if you yourself are still in, unfortunately, an archaic situation where you're manually tracking that, you just want to make sure that no one has gone over the actual limit for 401k, because that could potentially cause an error. And then separately from that, any type of information around like pay on a payroll. So if you have mixed up someone's benefits and someone's 401k, maybe your benefit deductions didn't pull by accident on a payroll or on an additional payroll, you really want to make sure that that is noted on this Form 5500. So another thing with this Form 5500, you do have to have like an accounting report for this specific one. So that's why I mentioned making sure you're fully disclosing everything and not waiting until the last minute, just because this one is going to require you to pull in either one of the big dogs like Deloitte, PwC, EY, BDO, KPMG, one of them to fully go through and audit your company. Then they send over an accountant's report, right? And once they send over that accountant's report, that should also be reviewed. And it could be maybe your accounting team has gone through that, but I would say to have like an outside person come in, do that accounting report, make sure you get it to either your controller or your CFO, have them double check everything and make sure any type of numbers that have been listed on the 5500 match what the auditors have also said and stated have come through for your benefits plan. So that does have to be included with this Form 5500. So remember, not to wait until the last minute. This is another big reason as to why you shouldn't wait until the last minute when it comes down to these specific audits, just because it's very, very critical. There's a lot of other things that tie into it. So like all of this data is coming from what is ultimately being processed in your system, being entered on your employees' profiles within your system, just like the accounting stuff too. So for this Form 5500, since you need an accountant's report, that's not something that you can just call an accountant in to have them look over every night, right? Overnight, they have their own job too. And so it does take some time to go through and review that all the data is really accurate. And so with that being said, you really just want to make sure that all of that is completed well in advance. And if you have an HCM provider, whoever is going through your benefits, so your brokers too, right? At this point, they all know the 5500 and what it requires. A lot of that is already set up in the system. A lot of these brokers and your benefits providers are just used to this already. So you really just want to make sure that you know who to go to on that side to ask for help if you need any type of help, and then just making sure you're following suit with the right deadline. And now to close out the 5500, now we're going to get into the lovely workers' comp audit. Workers' compensation, probably one of the most complex, but also most regulated of them all. So just like how, if employees are listening in, just like how you pay your premium each paycheck for your benefits, for workers' compensation, it's the same thing. Companies do have to pay premiums, right, to make sure that they can cover employees for any type of injuries. And so with that, they do have to go through audits. So from a company stance, anyone sitting in, an HR and payroll seat, there is an estimation with these worker compensation audits that need to be provided to your insurance providers. I'm just giving them an estimate on what you think your payroll will be for the year. And then based on that estimate, they will then proceed with giving a cost from that stance. However, all states require, now some states requirements are a little different, but all states do require that companies go through this audit every single year. That way they can just make sure that companies are staying in compliance, not trying to cheat out and not trying to say like the lower payroll when it was a lot larger to get them a cheaper rate, So from that stance, auditors do come in, they do ask for a lot of information. So you're talking about lots of payroll information is typically asked, larger reports that I mentioned earlier when you talk about a regular pay, overtime pay, double time pay, bonus compensation, commissions as well. When you're going through the estimation, it's really critical. So say if you were a payroll person that just got hit with providing maybe legal or providing your VP of HR an estimate, right? So that they can give to the provider, you really need to know what's going to potentially happen in the business for that year. You can, of course, give just a general consensus of, okay, this is what my payrolls are at this current moment and estimate that out for the next year. But if you know throughout the year, if someone knows throughout the year that they're going to potentially go through like a merger or acquisition, or if someone knows that, hey, look, our busy season, say you're in retail and during retail season, you're going to hire a lot to cover the mass shopping, right? So you may want to put a little cushion. You may also want to compare like prior years. But if you also know that you're potentially going to go through a RIF at some point and you're going to lessen your population, then maybe you want to change your estimation from that stance, right? So I would just say make sure before you are tasked with providing a full scope of what your year payroll will look like, try to get a better understanding of cost and what's really going to transpire over the course of that next year. Now, naturally, we can't predict the future, right? So that is just a true estimation, which is why these audits do happen. Because once you go through the year, you may have thought in January or December leading into January that the next year was going to be booming. Then you hit July and say, unfortunately, knock on wood, unfortunately, though, that something took a turn and you did have to lay off people that you didn't think you were going to have to lay off. Or maybe there's going to be a mass hiring that you guys just didn't know about, right? And so that's going to tack on more to your payroll. Those things are understandable and will absolutely come up. That's what these audits are for. So throughout the year, something unprecedented could happen. And so when the auditors come around, if your premium was lower because your payroll number was lower and your payroll number ended up being a lot higher, then you just owe them, money back. However, if it's the opposite, then they would owe you some money back from that stance. So that's why these audits occur, just to make sure you're covered from an insurance stance, any type of injuries that happen for your employees, leaves that might happen for your employees. Companies do have to stay up to speed on that. So just so you're aware, once a company gets larger, it exposes them to more audits, to more coverage, more different type of scenarios of things that they need to make sure that they have built into their budget. And this is one that definitely has to be built in from an employer stance. Employees do need to be protected, especially if you're just walking. You could walk and someone could have spilled water and you could have slipped and fell, and that's at no fault to you, right? Especially if you're in the restaurant, food and beverage industry, right? That's another critical piece where you have to make sure that they're covering that as well. And then outside of meeting just the employee requirements, this workers' comp does cover subcontractors. So just so you all are aware, when you're going through these audits, these auditors will make sure if you are employing subcontractors, that those subcontractors have their own insurance. And if for some reason they don't have their own insurance, that will also get tacked onto your premium. If you've not played a part in the subcontractor role, a lot of times there are some companies that may require their contractor to have their own insurance. And that's for this exact reason. Now, and then from an HR and payroll stance, of course, we need to make sure when they're being hired on, we have record of that to where we can provide that to the auditors. If not, hopefully it's a nice subcontractor. And if the auditor asks for that, you're able to send over that information. Lots of good things, I would say, between the EEO-1 report, the Form 5500 report, the workers' compensation audits. Those are the most heavy critical reports that are very, very common for the vast majority of employers, along with your state reports. So just so you're aware, if you're not already aware, lots of states will go through their own separate audits. So you may get hit with those too. But if you're sticking to what I said in the very beginning, and if you know exactly where to get all of your forms, federal and state forms, if you know exactly where to pull all of the employee information, custom report information, if you just have one big bulk of a custom report information that has all of the data that you can pull, all columns that you can pull, that would be best practice, right? So that way you already know it's there, and the auditor walks in and you're like, no problem. Although I will tell you though, sometimes one year I had a really odd situation with an auditor who just continuously thought my state report was wrong, which was not the case. And so that's another thing too. I would say just stay up to speed as much as you possibly can on the state reports, and also just knowing your federal reports and what should be included. I mean, there are some reports that just have a consolidation of a bulk of your company totals, but then there's other reports that have individual employees information, and then at the very end they have the full consolidated information for your company, very similar to the W-2s that are individual, and then the W-3 that's just one for your employer totals. But for some states, there's also that case. But just kind of stay up to speed, just because I do remember specifically when I started thinking about the audits that I was going to talk about here today, I did specifically remember that situation. And one of this auditor that I was dealing with continued and continued and continued, no matter what I did to try to explain the report, even after I called my HCM provider and they escalated and we looked all into it, it was like, this report is not wrong, but what she was expecting to see was not accurate. And so after sending her over everything, over and over and over again, eventually I guess she just kind of like died off and realized she was wrong. So that's one thing I would just want to kind of suggest, to just make sure you know your reports. And I do understand the day-to-day, right? We're talking about when we're talking about HR and also payroll. There's so many little things that just come up throughout the day, but especially if you're sitting in a payroll seat, most of your HR people are going to come to you and ask you for this information. And you may be then pulled in with the auditor. And it's just always best to just kind of have an idea on what these reports are, have an idea of what has happened in the company, have an idea just about your employee process as a whole. That way you can speak well to the auditor, right? So that they can understand that you actually know what you're doing and you're not causing any doubt towards them. And then also always collaborate, of course, with your HR and your accounting team. So in the payroll seat, we always have a tough time. It's like we have to work with both, and just to have like a really good partnership. And I say that this would be one to where you can really, really shine, right? From an audit stance, to get in there, to provide them the reports without any issues, and let them know you know your stuff. That also shows like the auditor that you're really open. It doesn't cause them any kind of like hairs to raise up, I guess, on their back. It's just kind of like one of those things where when you get in there, they ask for these reports, you immediately go in and pull them and send it over to them, versus them asking for the report and you say, okay, well, I'll have to circle back. Okay, I'll have to do this later. Or I don't know, or something like that, right? Just don't say I don't know in front of an auditor as much as you possibly can. That is my tidbit on audit. I hope that has helped at least kind of shed some light on some of the top ones. I know that those will be coming up over the next couple of months. So just get in there, get into the system. Don't be afraid of it. You can always fix anything that gets broken into the system. Just try not to stress. From that stance, an upcoming episode in a couple of weeks we'll have another special guest on, and we're going to talk about payroll in banking. It's going to be an interesting, a little different, but really, really interesting topic that I'm interested in and excited about bringing to you all. So thank you so much for listening into this episode. Once again, really appreciate everyone's support. Please like, comment, and subscribe. And from there, I will continue to bring you hopefully great and informative episodes. If you have any suggestions on anything, feel free to send me a note or leave it in the comment section because I'd love to hear everyone's feedback. Until next time, everyone, happy Valentine's Day. Goodbye.